China's housing market has been a topic of concern for quite a while, and although there has not been a full scale collapse, there are worries of a potential downturn in the near future. The Chinese government has implemented various measures to control skyrocketing prices for property in order to prevent a housing bubble. Numerous homebuilders have defaulted on their bonds, housing sales have collapsed, and thousands of new housing projects have stalled. The real estate market in China is influenced by many factors, including government policies, economic trends, and population dynamics. The importance of housing in their economy cannot be overstated. It has played a critical role in the Middle Kingdom's economic boom over the past 2 decades. Measures as a share of nominal GDP, residential investment has averaged 13.5% over the past 10 years. Housing is estimated to account for 25% of China's economy when including all upstream and downstream activities. The high scale of housing investment in China is concerning, but it is also part of a multi year plan to increase the country's urbanization. The probability of China's housing downturn morphing into something like the 2008 to 2009 housing crisis in the United States is relatively low, but the numbers are still worth watching. In this presentation, I will discuss the different parties impacted by the real estate or housing crisis, explain the factors that have exacerbated the financial issues in many of the large building corporations, and explore the measures that may be taken to ease the crisis and restore the housing market in China. Evergrande Group is China's largest and most prominent property developers. Founded in the late 90s, this group that originated in the southern Chinese city of Guangzhou has quickly expanded through its aggressive growth strategies and numerous investments. In recent years, the company has faced financial challenges that have raised concerns domestically and internationally. As of January of 2022, Evergrande has accumulated over $300 billion in debt. This figure has grown over the past 2 years. The financial issues plaguing the Evergrande Group and other companies of importance could have far reaching consequences for the broader Chinese economy and global markets. The Chinese housing crisis can impact various stakeholders at different levels. These are some of the key groups that may be affected. Homebuyers can be directly impacted if they have purchased properties from companies facing financial difficulties. Delays in construction, uncertainties about project completion, or potential declines in property values can affect the interest of individuals who have invested in real estate. Investors, including both individual and institutional investors holding stocks or bonds of real estate developers like Evergrande, may experience financial losses if the value of these investments decrease. The uncertainty surrounding the real estate market can lead to volatility in the stock and bond markets. Banks and other financial institutions that have provided loans to real estate developers may face challenges if these developers struggle to meet their debt obligations. A default by a major real estate company could have ripple effects throughout the financial system. The slowdown in property development and construction activities can have a significant impact on the construction industry. Companies involved in supplying materials, labor, and services for construction projects may experience reduced demand. Local governments in China rely heavily on revenue from land sales for funding infrastructure projects and public services. A slowdown in the property market can affect local government budgets and their ability to fund essential services. Given the interconnectedness of the global economy, financial troubles in a major economy like China can have repercussions on international markets. Concerns about the stability of Chinese companies may affect investor confidence globally, potentially leading to market volatility. The real estate sector has been a significant contributor to China's economic growth. A slowdown or crisis in the housing market can impact overall economic growth as it affects not only the real estate industry but also related sectors and consumer confidence. Beyond major companies like Evergrande, smaller and medium sized home builders and developers may also face challenges. Tighter regulations, reduced demand, and financial pressures in the industry can impact their viability and profitability. The Chinese government has been implementing measures to address the challenges in the housing market and prevent systemic risks. However, the situation remains dynamic, and the impact on various stakeholders will depend on the effectiveness of these measures. The next notable topic to address are the numerous causes that have led to the financial troubles and the possibility of a collapse in the Chinese housing market. The financial issues faced by China's Evergrande Group are complex. Several factors have contributed to the challenges the company has encountered. These are some of the key causes. Evergrande pursued an aggressive expansion strategy, acquiring vast amounts of land and diversifying into non real estate sectors. To finance these endeavors, the company took on a substantial amount of debt. Evergrande relied heavily on short term debt and pre sales of properties to generate cash flow. This strategy became increasingly risky as the Chinese government implemented measures to cool the property market, affecting the company's ability to generate funds from property sales. The Chinese government introduced policies to curb soaring property prices, including restrictions on home purchases, increased down payment requirements, and limits on property related borrowing. These measures negatively impacted Evergrande's revenue and profitability. Evergrande expanded into various sectors, including electric vehicles and tourism. While diversification can be a strategy for growth, it also exposes a company to different risks. Evergrande's move into non real estate sectors may have strained its financial resources and management focus. Evergrande faced challenges in selling properties due to the cooling measures implemented by the government. Slower sales meant reduced cash flow, making it difficult for the company to meet its debt obligations. As Evergrande struggled to meet its debt obligations, concerns about a potential default grew. This led to a loss of confidence among investors, creditors, and homebuyers, further exacerbating the company's financial issues. The negative sentiment surrounding Evergrande's financial health led to a decline in its stock prices and credit ratings. This made it more challenging for the company to raise capital and exacerbated its liquidity crisis. The government can implement policies to regulate the real estate market more effectively. This could involve measures to curb speculation, control property prices, and ensure a more stable and sustainable housing market. Tightening lending practices can help prevent excessive borrowing and speculation. This may involve stricter mortgage lending requirements, higher down payment requirements, or limits on the number of properties an individual or company can own. Efficient land use planning can contribute to a more balanced housing market. Local governments can optimize land use, designate areas for development, and promote mixed use developments to create diverse and sustainable communities. Introducing or adjusting property taxes can discourage speculative buying and encourage more responsible property ownership. This could involve higher taxes on vacant properties or those owned by non residents. Boosting the supply of affordable housing could help meet the demand and stabilize prices. This might involve streamlining the construction permit process, incentivizing developers to build more affordable units, or investing in public housing projects. Improving infrastructure, transportation, and connectivity in less developed areas can encourage urbanization beyond major cities. This can ease pressure on housing markets in major metropolitan areas. Enhancing transparency in real estate transactions and property data can help mitigate speculative practices and provide more accurate information for decision making. Investing in social housing projects can provide affordable housing options for the population. This not only addresses the immediate housing needs, but also contributes to long term social and economic stability. Collaborating with international organizations and learning from the experiences of other countries that have successfully navigated housing challenges, implementing changes, or can offer valuable insights and solutions. Implementing changes gradually rather than abruptly can help prevent shocks to the market. Phased approaches allow stakeholders to adjust and adapt to new policies more smoothly. The Chinese housing crisis is influenced by, and in turn influences, broader economic conditions. For example, the real estate sector in China has been a significant driver of economic growth, contributing to employment, construction, and various related industries. When the housing market experiences a crisis, it can have a ripple effect on the broader economy. A slowdown in the real estate sector can lead to reduced construction activity, impacting employment and related industries. It also affects consumer confidence and spending, as people may feel less wealthy if the value of their homes decrease. Additionally, banks and financial institutions that have invested heavily in real estate may face challenges if its property values decline. Government policies also play a crucial role. If the Chinese government implements measures to address the housing crisis, such as tightening lending regulations or introducing stimulus packages, it can have implications for inflation, interest rates, and the overall economic stability. The Chinese housing crisis intertwines with macroeconomic topics like employment, consumer spending, financial stability, and government policies, making it a central player in the broader economic view.